So Mark Mahaney, has all of this crazy volatility and the underperformance of your group make you think differently about the stocks that you are recommending to clients right now?
I don't think so. I think I still want to be muted and cautious, and I want to stick with within consumer tech. I want to stick with the PE names, not the PS names. So the stocks that you can buy on price to earnings multiples, not the stocks that you have to buy on price to sales multiples because the futures are in the future. Well, then it's Google, Amazon, probably at the top of the list. Facebook actually should still be in there if you're a 12-month investor. And then I love this sector, and I know you don't like the term. I know you find it nerdy, but I like these Venn diagram stocks that are both high quality and they are recovery names, and that's Booking and even an Expedia. Names that have been, bullet tested, battle tested, bulletproof, battle tested balance sheets and business models. But we're clearly seeing a recovery in summer travel unless Russia-Ukraine takes it off the table in Western Europe. I hope that doesn't happen. I think you're going to have a really robust summer travel season. There's a way to play that. And I think some of those names like Booking are a great way to do it.
The Booking CEO told us last week no resistance so far from consumers to higher prices for airlines and hotels. Mark, wanted to ask you about Amazon because I know it's one of your top picks. And its performance, it's been a little shaky. Today Barclays recommended Target as a defensive play if Americans are going to cut back on discretionary spending. Is Amazon that as well? How big of a component is the staples for Amazon buyers?
Well, look, Amazon's more discretion than staples, but that's changed over the last 5 to 10 years. We've all kind of lived through that, if you will. Look at what's happened to your average Amazon bill. We've clearly brought in more staples into that. Why I like Amazon right here, right now, is there are going to be top line issues. Currency is a big issue across tech, no doubt about it. Weakness, consumer discretionary weakness may be in Western Europe. Inflation is an issue for retailers, no doubt about it. But I think Amazon still holds as a margin expansion story this year. If I'm right about that, that's the unlock on the stock. They freighted that expense, that P&L last year with so many one-time expenses related to COVID and supply chain inefficiencies that I think they've largely worked through. I think margins rise. I think the stock works. I also think that with that 2 years of massive investment that they put in their shipping infrastructure, I think we're finally going to see an R on all that a return on all that investment. I love this concept of shipping elasticity. The faster they ship to you, I think the more people are going to buy from Amazon this year. So I like it fundamentally, and I think you got a great value play, really, in the internet space. Here's your chance, Amazon.
Christina, while we're talking about opportunities here within the beaten down tech sector, you flagged cyber and some of these stocks that have gotten mixed in with all the selling around technology and high valuation companies. What are you hearing from the street on this group?
You have a lot of people that are saying maybe it's a little bit too low for the cyber stocks, selling off, especially given the near term with attacks on the horizon and the push into the cloud. So maybe it's oversold. I know some people are quoting Dan Ives because he put out a note saying that cyber is one to get into. The same thing with software stocks. And maybe as a point when it comes to software is this big push. But to Mark's point right now that he just mentioned those Venn diagrams, those stocks that overlap, then that pretty much says companies like Datadog and the ones that aren't profitable you need to get out of, right? Because these high-flying growth stocks that we've been in and reaping the benefits for so long may no longer sustain. You want to move over to those large-cap companies with free cash flows that can, play this volatility in the near term. So I don't know. I think maybe it was more of a question for Mark, to stay away from these high-flying stocks because they don't overlap in your diagram.
No, I think that's the point. HP, maybe, Christina? It's hardware. But steady cash flow, Warren Buffett likes it.
Okay, so then it's a value play like you mentioned, but HP is an excellent example. Where's this transition to software? Where's this transition to make chips? You could argue that HP has just fallen behind the curve. They need to speed up. They don't have the ecosystem like Apple does to keep the customers on par and locked into their system. So it's a big question mark. Some people think it's a great value. Warren Buffett does, of course, and a lot of analysts. But long term, where's their transition?
Right. Or maybe his deputies. We don't know. But either way, Berkshire top shareholder, it's up 15%. Mark, Mike, Christina, thank you all for joining me.